Good afternoon, everybody. For those of you who don't know me, I'm Gaurav Sinha. You would call me the perennial protagonist, somebody who's always saying, why should I believe anything you have to say? And then try and decode aspirations and code brands. That's in principle what I do for a living. I work with hotels, restaurants, culinary propositions, from experiences to destinations, and from countries to cafes, everything in between. A few months ago, there was a GRIF advisory board session where conversations came about, not having enough statistical information or meaningful insights about the market or the region in the GCC, and it comes to F&B. And people sort of operate in isolated silos. You've got landlords, tenants, individual operators, quasi-government entities, and then the individual retailer. So I sort of asked the question from the industry. I said, would you like a market research to be conducted, some sort of market intelligence that we can potentially harness and bring together using expert opinions of voices of many people who are actually in the room here today. And we spent 4.5 months preparing a 200-page report, which is available to GRIF delegates at a discount. It's available outside with my sales team. But today I thought, instead of pitching myself shamelessly about the report we've published, I would like to share some insights of what actually we discovered. So I'm going to continue in the same vein with regards to, and there are 10 key insights. I'm going to read them out to you, so you have a lot more listening to do than actually, there's not a lot on the screen per se. And I'm going to share with you some of the key takeaways, so you have some insights which are hopefully going to trigger a new way of thinking or address some of the things that you need to consider as you plan your business strategies for the future. So worldwide, food deliveries represent nearly 4% of total food sold through restaurants and fast food chains. The growth in smartphone usage is set to grow by 30% year on year, and this is one of the key driving forces behind the surge in third-party dining apps. By 2020, QSR will earn 10% of sales coming exclusively from smartphones, at which point the global mobile food ordering business is expected to reach $38 billion. Pizzas remain the region's most favorite home delivery category. In the 100% home delivery segment, pizza chains are poised to grow by nearly 10% in current value growth. As per recent Euromonitor stats, 82% of restaurateurs have cited receiving reasonable bookings from dining apps. And this overwhelming popularity of apps is only set to rise as more restaurants are rushing to tie up with leading service providers like Zomato, Deliveroo, Talabat, Uber Eats, and so forth. Insignia's recent study for Miras and the City Walk development, we discovered that 40% of the respondents cited that they preferred to dine at home, as to why they shunned dining out was way ahead from price. So the preference of staying at home is also your competition as a restaurateur. 16% of respondents said travel time was not a concern, reinforcing the appeal of ordering at home. As per a recent KPMG report that's been circulated in the marketplace, a majority of 78% of consumers felt eating out has become very expensive in the last 12 months. Exposure, reach, and penetration are the biggest advantages of tying up with these dining apps, while losing control over quality and dilution of your brand experience are the biggest drawbacks. In Saudi Arabia, 100% home delivery takeaway pizzas remain the dominant category in 2016, while in the non-pizza category there was negligible presence. Third-party online and mobile ordering have a limited appeal in Saudi Arabia, as per the report, where people still prefer to order food over the phone or via a company's website. The second insight or the trend that we discovered is the rise of conscientious consumption. As per KPMG's Ready to Serve report recently, 45% of consumers in the UAE felt that there were not enough healthy options available in the market today. As per our findings, consumers are willing to pay a premium for certified organic food, and that trend is more pronounced with age as consumers become more health conscious. Between 2006-2007 until 2016-17, there has been a marked rise of 12% in F&B products launched with no additives, preservatives, or organic and GMO-free claims labeled on their packaging. During the same time, F&B products launched with environmentally friendly packaging, which is animal or human welfare related, has risen from a meager 1% to 22% in the past 10 years. Consumers are driving the demand for organic, natural choices for F&B, with 77% of respondents citing eating healthy during the week or having become more health conscious or always eating out for healthy food as some of the key drivers. Governments of both the UAE and Saudi Arabia have recently taken reformative steps that favor healthier dining. By the end of 2018, restaurants in Saudi Arabia have to provide nutritional information as a mandatory requirement on all their menus. At nearly 11%, UAE is also the second fastest growing vegan market between 2015 and foreseeable between 2015 and 2020, behind only to China. Juice and smoothie bars, perceived to be healthy, have seen a growth of 6% in 2016, with chain juice smoothie bars driving this segment at 15%. Consumers are also increasingly choosing juices and smoothies over traditional on-the-go refreshments such as carbonated drinks and ice cream. Another trend, the third trend which we picked up through the research that we conducted, is the rise of what we call culinary micro-districts. Location and distance is still very important. 63% of our survey respondents said they don't mind traveling up to 20 minutes to eat out. Besides proximity to home, ease of arrival and parking were the two critical aspects that played a crucial role in determining a restaurant's core clientele. In the UAE, there is a growing desire for closer to home convenience, resulting in the creation of culinary micro-districts. About 10% of the diners quoted in the Insignia survey, the reason for not dining out was because there was nothing nearby. In Dubai, new housing development projects are on the rise. There are 7,000 homes opening in Dubai land, for example, and they are creating new pockets of potential diners looking for good neighborhood restaurants. The availability of alcohol still remains a big draw for diners when deciding a place to eat in the neighborhood, which challenges potentially the norm of how the dominance of shopping malls and five-star hotels with regards to the way dining options exist today. Another trend we picked up was on the rise of the growth of mall dining. 52% of respondents in the UAE cited that they eat in malls between 1 to 3 times a month, and around 26% said they eat in malls more than 3 times a month. A majority of 47% of respondents eat in hotel-based upscale restaurants only on special occasions. As most space is proportioned to F&B operators to draw customers into malls, a remarkable 48% of overall value sales was accounted from F&B operations in 2016. The retail supply in Dubai and Abu Dhabi has burgeoned from 6 million square meters to 7.5 million square meters gross leasable area by 2019, and expected to outpace the growth rate of residents and the tourist population. So there is a clear growing concern about demand stimulus resulting in fierce competition. Malls present unique challenges like higher rent and inflated costs, and premium malls impact the bottom line. The merits of operating in premium malls, however, includes brand exposure and higher footfall. At 52%, Riyadh is considered the most favorite market for GCC expansion for F&B businesses, followed by Jeddah. Another thing that we realized through the research is a term called five-star dining, because today you don't go to five-star hotels purely to have fine dining meals. You can also turn up in your flip-flops for a milkshake or a burger. Five-star dining. A remarkable 80% of UAE residents fall between the middle-high income group. 88% of these diners expect quality, 82% pleasant settings, and 75% seek hygiene above reasonable prices. About 52% of the diners spend between 100 to 200 dirhams per person per meal. That points to an increasing expectation for high-quality product at mid-range prices. The trend of pulling crowds to celebrity chefs is fading, as nearly 71% of respondents felt that they were overrated. With a rise in hotspots like City Walk, D3, downtown Dubai, upscale restaurants in hotels is no longer the only option that warrants consideration. At over 13% CAGR for branded hotels, Saudi is the hottest destination where growing population and are increasingly seeking sophisticated dining options. Among them, Asian full-service restaurants was the most dynamic in terms of growth in 2016. We also looked at regional flavors, what's happening in the market locally. GCC represents unique challenges to investors and F&B operators, including expensive setup costs, outdated procedures, and limited local partner choices, and excessive visa fees for staff. Did you know 5% of developers own over 87% of the available mall stock of 3.2 million odd square meters of gross leasable space? 15% of retailers operate over 90% of the international brands. Rents may be eating into profits, but when compared to other international markets like USA and Australia, UAE is still a very profitable investment market for the F&B sector. About 39% of restaurateurs said their focus on cost optimization was towards rental costs. Introduction of VAT should not have a long-term impact on F&B businesses, and that dampening consumer sentiment we do not foresee to be permanent. Saudi Arabia has recorded the fastest growth in the F&B sector at over 8% in the last 4 years. This trend is likely to continue over the next 4 years. The Middle East sees an increase in spend with average annual growth of 7.4% between 2006 and 2016. Now, we live in a world where every customer is a critic, and as per our Insignia City Walk development survey, 85% of respondents cited that recommendations and good reviews and ambience as the top 3 reasons for choosing to visit a restaurant. Online restaurant ratings is second only to word of mouth when it comes to diners trying new restaurants. Traditional media channels like PR, print, are fading as social media is increasingly becoming a medium to connect and engage with potential diners. Instagram has outpaced Facebook in the rate of new user registrations globally. This means restaurateurs now have to create superior imagery experiences that is suited for social media environment. And the most popular hashtags related to food on Instagram in 2017 were foodie, clean eating, and paleo. 34% of diners between the age of 18 and 24 use their mobiles as a surrogate dining companion. Saudi Arabia has recorded the fastest rise in social media users, growing at 32% every year. A remarkable 29% of social media users in Saudi are registered on Instagram. We also looked at the impact of local innovators and events. From food festivals to food trucks, the way of experiencing food has fast expanded. While chefs who came to the region to work in restaurants are now putting down their roots and setting up their own. 45% of respondents surveyed by KPMG reported they visited food trucks or food festivals in the last 6 months. Food trucks are gaining popularity as consumers are seeking new experiences and gourmet street food. Street stalls, kiosks, including food trucks, saw a value growth of 14% in 2016 to reach value sales of 231 million dirhams. As per quoted estimates, it takes around 200,000 dirhams to start a food truck business in the UAE. Lower costs and mobility places a food truck business at an advantage. And in a huge leap, the Dubai municipality issued over 200 food truck permits in 2016 alone. Rising events like Dubai Street Food Awards, the World Dubai, Taste of Dubai, and so forth, help elevate the region's profile as a culinary destination, providing an opportunity for F&B operators to connect with potential diners. Through the work that we did in the report, we also looked in depth at what the impact of discounts and the various offerings of Groupon, etc. In 2015, according to reports, the average Dubai customer saved around 6,000 dirhams just with the Entertainer app. After 16 years working as a book, the Entertainer has now gone fully digital. 81% of respondents said that they are influenced by deals when choosing a restaurant, a trend in a region where discounts and offers is a deeply embedded aspect of our culture. We've always said Dubai might always be on sale. A free premium upscale restaurants have, however, taken a contrarian point of view and find quality service and experience are the best way to preserve brand quality and elevate customer experience. The debate continues whether discounts are the right way forward or you should not participate in that. Lastly, we also looked at the futurology aspect, the shape of food as the future evolves. The F&B market sector in the GCC states, the F&B market sector in the GCC states is predicted to continue to grow at over 7% annually, reaching $196 billion by 2021, which is up from 130 billion previously, according to the research company MENA Research Partners. The growth is being driven by disposable income, a shift from dining in to dining out, and a trading up in dining habits and preferences. Kuwait is the third largest F&B market in the region, but set to grow the fastest at 9.6% annually. There is strong favoring towards restaurants that showcase local food and use indigenous food. Over 30,000 people surveyed by the Kantar Word Panel in the UK provided the free from component in the last 3 months leading to that survey. Government reforms like that introduced by Saudi to tax 50% on carbonated soft drinks and 100% on energy drinks is encouraging consumers towards attractive, healthier options. There is a growing narrative of consumers drawn towards healthy eating choices, and between 2012 and 2016, we have seen a 25% increase in vegetarian concepts and 257% rise in an affinity towards vegan products. In 2018, Veganuary, which is when people go vegan for the month of January, you've seen a significant rise in participation from just 3,000 odd people to 120,000 people this year in the UK alone. Saudi is aiming to attract 30 million visitors by 2030, and towards this intends to invest over $40 billion in annual tourism. With a slew in hospitality investments announced in the country, the dining scene in Saudi is set to receive a significant boost. Some of these comments and insights that I've shared as sound bites today are actually embedded in a report which covers a lot more information. And I think, as an industry, we have a very interesting space that we stand in today. We are talking about feudal F&B as one of the concepts we talked about previously, the tug of war between tenants and landlords and operators. And I hope you found the comments that I've shared with you today insightful. There is more information about the report available outside, so maybe after the coffee break you can have a chat and a conversation with one of my colleagues. Thank you very much for giving me the opportunity to come and speak to you today.